Good evening, YouTubers. It's me, Johnny. Just a short video on how not to get body slammed shorting Helena of Troy. I want to show you how badly I messed up tonight. I shorted Helena of Troy, which is HELE, ticker symbol, not investment advice. When I say shorting it, I'm betting it's going to go down. And that's how you profit. You short, you borrow the shares, they give you the cash, it goes down, you pay back the loan. Anyways, I'm just going to pour a beer before I explain all this mess. Tonight's video is brought to you by, I'm not sure how you say it, Hanuman. Anyways, it's a lager. That's not too bad. Anyways, I shorted it on the open. I got in at about 87 bucks, shot up to $111.12, something in that order, and that was up 30% from yesterday's close, or from the close of yesterday is up 30%. Now it's only up about 21%. Anyways, I shorted it a little more than I normally would. So anyways, don't do that. It traded up on news as a short squeeze. The president of the CEO of Helena of Troy has resigned, so there's a lot of bullishness that this thing can be turned around, except for the fact we're going into a recession, and I don't think it'll be turned around. It's probably going to 40 bucks a share. I don't think it's going to zero, but who knows? At least 40 bucks a share. I had shorted it like up in here, then it went down into here, and I covered. That's the whole point. When you short, you can't hold these things long term. You got to cover part of your position or 75% of your position, take a ride on the rest, and eventually cover the whole damn thing. Anyways, totally got body bagged on this one. Boy, this was painful. But I want to talk to you about a few other things. Let's go to gold. Here's a chart on gold. This is just my opinion. I think we're getting closer and closer to a big breakout in gold to 2400, 2600. And personally, I think the catalyst, or what will set it off, will be the debt ceiling issues going on in the United States right now. My opinion, I think we're going into a slow growth economy, or slower, probably a recession, negative growth, maybe by the second, well, maybe in 6 months. I think the economic numbers, GDP came out today, is at 1.1. I can't remember what it came out to be, but anyhow, I think gold and TLT will take off like a streak of dirt. Here's a chart of TLT. And a lot of people think gold will trade the opposite of TLT, or TLT will trade the opposite of gold. But in my opinion, you're going to see gold and the dollar go up. Here's a dollar, or UUP, the dollar index. Right now we're down a little bit. We're up 3 pennies. Looks like up 0.1%. Anyways, I think we're probably going back up to here. Now, when I say all this, I don't mean it's going to be in a straight line. What I think is going to happen is you're going to see gold take off because it's discounting disinflation or deflation. In other words, gold will rise in anticipation of the Fed capitulating and lowering rates. My personal opinion is if and when they do lower rates, it won't be to zero. That's where I have a difference of opinion than a lot of people in the marketplace. So that's why I say we could experience some disinflation or deflation, or the rate of inflation will come down. I'm not claiming that we're going to go to zero, but who knows? Who knows? Right now, the M2 money supply is dipping. It hasn't done that, I think, either since 1959 or the 1930s, depending on who you believe out there. So I think a crisis in the funding of governments was going to pop all this off, and there'll be a lot of volatility, and I expect long bonds will really, really profit. TLT, IEF, which is 10-year, 7 to 10-year duration bonds. Looks like we're down today. Um, and gold miners. I would be buying gold and gold miners. Pick, you know, how you want to trade these things. Um, Here's PAHYS, which is just physical gold bullion they store to you in a trust. If you don't want to trade GLD, which is just a futures contract, here's where they actually store, allegedly, they score gold bars in a vault somewhere and charge you a fee. You can profit from that. Here's another interesting play. I'm already in it, but SLJ. And I just want to point, all these charts are about the same. It's higher lows, higher highs and higher lows. So that's why I'm particularly bullish right now on TLT, almost any gold stock and all that. My favorite junior in the space would be Sandstorm. It's what do they call it? It owns mineral rights as opposed to the gold mine. Gets a royalty off of gold and silver and other minerals, but mainly gold. I think it's mainly gold, copper, and maybe a tiny bit of silver. I'm not really sure. Wheat and precious metals is more 50-50. It's more 50% gold, 50% silver for gold royalties, if that is your thing. I just like gold royalties because they trade like gold, but with more alpha, and it's a little bit safer than owning gold mines. If you notice tonight, I'm going to be highlighting large cap gold mainly because they're large cap, and I've never seen it in my lifetime where large cap gold companies are, I hate to say valued, undervalued, but it's the first time in like 10 or 20 years when I've seen really undervalued, and I hate saying that. But anyways, here we go. Here's the lows right down in here. We keep trading up and up. We're consolidating here. I just think it's going to take off like a streak of dirt. Appears to me we bottom out here, and as you can see, there's nothing like, if it got down to here, I'd probably get out even before here. But anyways, for a trading position, for a long-term position I wouldn't, but for a trading position, same thing in Newmont. I think Newmont's going to basically go down to, it's right down in here. Oh, it's right down in here. I doubt it'll go down much more. Excuse me, bounce through this trend line, and don't pay no mind to trend lines. I just have them on there for my own reference. I'm more of a trend trader. I just have it there for reference. But once we get past this high, 54, you could really see it take off, maybe to 100. But from 50 to 100 would be a nice double. From, I bought in the 45 range and a little bit lower, I think. Yeah, 43. I bought down in here, and I think we're going to 90. But I'll take off part of the trade before it gets there. Here's Barrick Gold, same situation. If I had to guess, Barrick Gold is a little stronger play as far as the large caps go. They both pay a dividend yield of about 3%, 2.5 to 3%. Might pay 3 points, something like that. I bought Gold Corp when it's paying 5%, which is really marvelous. So if you bought way down when it was lower, you get a 5% dividend. Now here's a controversial company. I'm not telling you to do this. This is Caledonia Mining, which is in Zimbabwe. I bought it when it's way down here. Like, wait, no, not down here. No, like around 9. Well, between 9 and 10. I bought it between 9 and 10. And back then it paid a 5% dividend, if I remember right, which is kind of rare. But because it's headquartered in London, or like Channel Islands or somewhere like that, but the shares trade in London, but this is a ADR. So if you like taking the risk of Zimbabwe, it came down a lot from up here, but if you bought up down here 10, it almost had a double, so it's consolidating back. But also too, I'd also just say as a reminder, there's big problems in Africa and South Africa and Zimbabwe, and some of their mines I think are in South Africa, mostly Zimbabwe, or the majority's in Zimbabwe, not South Africa. Here's a bigger problem. Here's another mine. I don't recommend you buy this. This is palladium. It's Sibanye. Most of their mines are in South Africa, and they have a lot of problems with water shortages, electricity. Eskom can't even keep the mines. There's not enough electricity from Eskom, which is their electrical company there, to even mine. They have problems with strikes and miners and all that. But this would be more of a more of a speculation. But I bought it when I think it yielded 7, 8, 9% dividend yields, which are nice to get. But when you're dealing with South African and Zimbabwe companies, usually they pay out nice dividends. They cut them when prices crash. But sometimes you get such nice dividends, it's worth holding and seeing what happens. The only trouble is right now, Africa or South Africa and Zimbabwe, at least South Africa. I'm not as bullish on South Africa, but in Zimbabwe things are okay. So I'm more with New Caledonia. But anyways, if you want platinum, and I think you should have platinum, and I think it's going to go up a lot. I mean platinum like the metal. You can buy platinum coins or an ETF that supposedly stores the bars, the platinum. That would probably be a better way, a safe word. That would be PPLT, I think. Yeah, this is the it's a platinum ETF. This would be the safer play, and this is going to sound crazy, but it wouldn't surprise me if platinum really took off, even though the economy is slowing. As long as it's in an uptrend, I would buy it. Anyways, I've talked too long. The only other thing I will say is I think the economy is going to slow down. Um, I'm still shorting stuff, and I put on a new short in Marine Max brand. Well, I closed my short position out before, now I just opened it up. It's just dumb luck. I shorted it up in here, and now it's already in profit. I'll hold this. I don't know how long, but um, I think we're going into a recession. So owning luxury boats or companies that make luxury boats, stuff like that, 1W and HZO would fit that bill. They're just going to keep going down. As you can see, they're down from $60 and change all the way down to 26. I think they're going to go probably another 20-30%, maybe half, maybe half. HZO might go to zero, but I don't know. Just on bad management and debt levels, nothing like fraud or anything. Anyways, that's just my view for right now. The debt limit problem in the U.S. will probably kick a lot of this off. That's going to scare investors. Some companies, some things are worth shorting are going to keep going down, in my opinion. Gold and long duration bonds will probably go up. The dollar is going to go up, and it's probably going to surprise a lot of people. And a lot of my viewers are free to disagree with me, but I think the gold and the dollar are going to just really, really zoom all over the world, especially right now in Argentina. Their currency is really crashing against the dollar, as it is in Colombia. Colombia is an excellent place to go to get cheap assets right now, except for the fact they could get much, much cheaper. But you can get assets or shares in Colombia that yield 10 to 20% right now. But if the economy slows and commodity prices come down, example in Colombia, they have a lot of oil in Colombia. Well, I don't want to say a lot. They have quite a bit of oil compared to other parts of South America, and not only Colombia, but in Colombia and some of the surrounding areas, they're one of the bigger players there, as is PBR, or I'll put it in. This is the Brazilian oil company. I still think these things could go down, but they pay such huge dividend yields. It might, even with cuts, they pay big yields. Other than that, I don't own too much oil shares right now, but I will be looking to redeploy like in Africa oil. Not now, but who knows? But I like to have oil exposure in Africa, North America, and South America. But in Colombia and Brazil, the banks, a lot of the utilities are super cheap right now. I just think with a strong dollar that they could get much cheaper, but you can get dividend yields down there for 5 to 10%. EC is, I think, 17 or 20%. Let me just check here. According to here, it's yielding 21.5%. It fell 15%. Yes, the day before yesterday, and then yesterday 3%. It's about 18%. I added some more shares down in here. Lucky for me, I usually buy down in here. I still think it's going to go lower, though. I would not load up on this stuff. As you can see from the chart, it's definitely in the downtrend. but I still think they're going to pay out dividends, so it may be worth waiting. May not be for most people though. Anyways, that's it for now. We're going into a recession, the economy's slowing down, and I would expect the dollar, gold, and long duration bonds to really shoot to the moon, and asset prices get much, much cheaper in North America as far as conventional like stocks, stuff like that, junk bonds, things like that.